Reason why some adopters or trainers of crypto quit after some times is what we call confusing of good timing with skill. Confusing of good timing with skill, because early success often come from entering crypto at the right time, trading during easy bull markets, and riding overall market expansion. This creates a false sense of mastery, because when you are trading at that point, when you enter maybe 20 consecutive trades at the right time and you make profit in all the trades, all of them went as you planned, what happens? You will begin to think that you have mastered that particular strategy. You begin to think that this strategy is the best. You begin to think that no one can beat this strategy and that this is the strategy you will be using for the rest of your life. But what happens? You didn't actually know that you were just entering those trades at the right time. Okay, because the cycle has not actually changed. Okay, so you will think that you have cracked the code of trading, that you've seen the best way to do it, but in reality almost everything goes up in a bull market because you were trading at the bull season at the right time. Risk is actually hidden because the market is always green. Bad entry still gets saved by trend, because even if you didn't do your technical analysis well and you enter the trade at any time, because of the bullish momentum, the market will still favor you at the end of the day. But when the market flips, mistakes are punished. No more market forgiveness. The bullish momentum, the bullish season, may forgive you and still give you a profit. But when there is no more bull run, you will suffer for your mistakes. All right, so that is it. Another reason why people quit is overfitting strategies to past data. Okay, sometimes trainers backtest a strategy on limited data, optimize it until it looks perfect, and then ignore unseen market conditions. They ignore some of those factors because they think that what happened yesterday may still happen today, and this is what is called overfitting. So the strategy works beautifully on historical data but fails badly in live markets. All right, sometimes you may be trading using demo and you may be applying those strategies on a demo, and that's why some persons say that it is when you begin to trade live account that you discover that demo account is really a demo account, because sometimes you may be trading that same strategy on demo account, you'll be making some good profit, but once you fund your live account and apply those strategies, you begin to lose, because the data at which you are trying to trade is just a temporal limited data that maybe was favoring you as a result of that market cycle. All right, so one thing you should understand is that the crypto market evolve, participants change, algorithms adapt, and exchange adjust mechanisms. That is why in my training, in my crypto trading course, I always tell those of my students that are learning with us to always be part of our subsequent trainings, because most of the times you will discover that the market is no longer performing well with that same strategy that was performing well before. So at the end of the day, you need to do what? You need to learn more. You need to understand the market. That is why I thought about market structure in my training. You need to understand the market structure and see when to change your trading strategy so you cannot run into losses. A strategy that worked in 2021 can be very dangerous in 2020, between 2024 to 2026. Are you getting it? That is just the fact. So you don't use a temporal data as a strategy to trade a current market. Temporal past experience. All right. So that is it. Another reason why people quit will be discussed in the next video.